What's going on, traders? Hope everybody is having a great weekend. We are going to do a quick analysis here on the E-mini S&P Index futures this week. I'm going to go through the market watch calendar for our economic data for this week. Reminder that it is a shortened week, Good Friday. This week on the 29th, I believe that's Friday, and so we have a 3-day weekend. And so just be prepared maybe for just maybe a little bit more hesitation and balance in the markets. Before we get started, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so let's get into the economic calendar first, then we'll get into some charts as well as some of our other data points that we like to look at that helps us formulate a game plan based on our levels, not on our bias. And we'll go through all that good stuff. So, all right, let's go through the calendar here, see what we've got. A nice advert here, as you can see, right in our way. But here we go. We will do what we can here. All right, so Monday we have Bostic speaking. The market will be closed. That's that's in pre-market 8:25 here, and then we have Goolsby speaking at 9:05 as well, and then Fed Governor Cook speaks at 10:30. So we'll just pay attention to that. I really don't expect much either way, but we will be cognizant of that at 10:30. As well, Tuesday, really not too much that's going to be moving the market. And then on Wednesday, Waller speaking, market will be closed. Thursday, we'll be paying attention to initial jobless claims at 8:30. And then the Chicago PMI we will watch as well at 9:45, and at 8:30 we have GDP. So definitely pay attention to that in the pre-market. Friday, as we went over, the markets are closed, and we do have core PCE data coming out at 8:30. But yeah, we'll just see about that. Markets will be closed, as I mentioned, and we actually have Fed Powell speaking at 11:30. So it'll be interesting maybe to see what comments he makes. Markets, of course, will be closed, but good to know what he's got on his mind. So that's all we've got for the economic calendar. So let's just move right along and get into start off with the weekly chart here on the E-minis. And we had a bit of a kind of a flag formation here that we were watching, and the pushed up higher. We've now made another higher high. This is just the gift that keeps on giving for the bulls and will remain bullish until really proven otherwise. But from the weekly standpoint, what are we going to watch for? Now that it broke out of the high of the previous week, I'm going to definitely be paying attention to that, just as a little bit of a gauge here, as a certain level that I want to pay attention to, the previous week's high, and that's going to be coming in at 52.53 and a half. 52.52. I was off a little bit here. 52.53 half. Oh god, 52.53 half. There we go. And so I'll be watching for that as the first thing I want to see be potentially supported. If we start to break down below that, then we will probably, with the FOMC, we're going to get into that, the charts a little bit more granularly. But, we do have some interesting structure filled out below. So I do think that I'm going to be on watch for a potential trend down day this week. And there's another thing that I am looking at when we get into the VIX here, which could signal where we just want to be a little bit cognizant of that. And I will go through a little bit of the other structure things that are happening in the market right now that may make us a little bit more vulnerable to that type of a move, right? But it's just speculation, so we'll get into that later. But I think that holding over, we're going to remain bullish though, pretty much. And obviously, bigger picture here, we're talking all bullish. We can pull back, and make a daily lower high, weekly lower high, not a big deal. One down day, one trend down day isn't going to do anything, or one trend down day really isn't even going to make a daily lower or higher low, excuse me. You know, don't get me wrong about, you know, what I'm trying to articulate here. Anyway, so if we do break back below this level, then I think we could see trades a little bit into this previous week's range, maybe towards the lower part of it. But really, what are we going to be watching, right? It's pretty much going to be the highs of the two flags that we just broke out of. So, you know, right around in this area here, right? So this is the previous one that I want to pay attention to, right around this 50.49. We can call it 50. Oh shoot. Even 50.60 there, just to round it off. But anywhere in that area, 50.60, 50.40, 57. Watch that area as well as another area which could be crucial, you know, to holding for the bulls. But other than that, I'm also going to be watching this other flag, right, the bottom of the range here, where we were kind of trapped in this 2-day balance, this 2-week balance. Then we finally broke out over it, and now we're just stair stepping now, right? So so I'm also going to be watching the that high of the previous week and the low of the previous week, and that other level there is going to be down basically 51. We'll call it 51.58 to be 100% precise. It is 51.57. Okay, so we'll be watching that as well as another area if we do start to see a down day, as a potential bigger area for some support to come in. But again, the gateway for the bears really is going to be over that prior week high. So I'll be paying attention to that. But plenty of areas here where we could trade down into, and you know, more than likely find a decent amount of support. Let's just switch it down into the daily here real quick and take a look at what else we are watching. And the charts here just really riding the 20 and the 9, just really beautiful. Has not, and this is exactly kind of the price action, you know, from the daily perspective that you really want to see, right? We're seeing price action really stay in sync with the 9 and the 20. We haven't seen too much of the extension yet, right, where we get extended here. We had a little bit of moment right here. This was all the way back in December, but you can see the distance there between those moving averages, and we needed that regression. But we've just, from there, really haven't gotten too much away. So for me, this is pretty nice, you know, healthy price action. No real reason for concern. Now, we were talking about back at this 51.53, you can really clearly see better on the daily, kind of that balance range that we were trading in, right? And this, you know, often can be very, frustrating for traders, because, you know, we're not, you know, in that trend mode. But trust me in saying that markets are more often in this balance consolidation mode rather than they are in the trend mode. And remember that also too, we always go from running or resting or running, range compression to expansion, right? So here we had that compression range. We've now broken out of that balance. We've come back up. So from the daily perspective, if we start to pull back into, and look at this really nice confluence here, pull back into this 50 to 53 area, nice confluence with the 9, another possible bull flag setting up right here, boom. And my next ultimate target for here, the SPOOs, is probably going to be 5,400. So as long as this holds, that would be the ultimate next target that I'd probably be looking at personally. Now, of course, we're going to have to get over this, this, what day is this? This is the swing high from the 22nd. But that's going to be the next thing that's going to open us up for those higher prices, right? So we'll just keep an eye here for that potential pullback, get a little bit more lock and step with the 9, and then line us up for a next move up higher. But coming back and retesting the high of this prior balance would make sense. Probably some liquidity there waiting. But, you know, it definitely is worth mentioning. Up here, we are pretty thin on the volume profile, so even if I got in long here personally for some type of a swing trade or something like that, am I really going to be shooting for the fences, and going in, heavy at all? No, of course I wouldn't, because the risk to reward you know, is not really there for me. But there's certainly a trade to be had there, in my opinion, if we see that setup. But I'm going to be just mindful that we're treading in very thin waters up here. We are not in the overbought. We're starting to get back in that overbought reading here on the daily, but we're still monitoring that overbought reading we have on the weekly, right? And we started to see this turnover. Now look what happened last time. It took a while to happen, but when we saw this type of a reading, it took like I said, it took a little while to come to fruition, but that gave us that extended down period in the market that we experienced last, right? So does that mean that this is going to happen again? No, not necessarily. But I mean, if it did, I'll just throw this out here. Where do I think we could potentially go if we really saw this turn down? I mean, I wouldn't be surprised to see. Now, again, this is just total conjecture, one step at a time. I mean, but I mean, I really wouldn't be surprised if we, at some point, retest the prior highs again, and then we rip up from there. I'm not saying that's going to happen this week, this month, or even in 3 months, but we'll see, you know. But this is definitely something that we're just still going to be monitoring very closely, and we're not quite at the end of the month yet, but if we just throw it up on the monthly, it is up there as well. So just food for thought, and we will watch it. All right, so back to the daily here. So yes, we can afford to get that pullback, retest the prior high of the balance, and then move up higher. We take out the swing high at that 53.22. We'll call it 53.25. We take that out. We're going to be looking bigger picture for that 53.50 and then 53.40, right? And then 5400, excuse me. So that's what we've got here. Okay, so let's get a little bit more granular with the SPOOs here, and we'll go over a couple of other levels and things we are watching. Here we go. Okay, so okay, here we go. Okay, so what I was going to do, all right, I already have them drawn out. Let's find it here. Boom. Okay, there we go. Gonna have to wait a little bit more time till I get my zones like this completely worked out. Gonna need a little bit more price action. So we just have some other levels here that I will be paying attention to for this week. Now we're hanging out at this critical area right here. Around this 52. We're in Globex right now. Markets are mostly pretty much flat, right? And we are here trading below still the hourly 9 excuse me, 9 and 20. So we'll keep that in mind, but we're at a critical support right here. This is the high of the 3 o'clock candle from the FOMC run, so we'll be paying attention to that. Anything under breaking these lows, this kind of comes into where I was talking about this thin structure that's created on that FOMC move. You can see here on the volume profile this huge lower volume node here as well. So if we really start seeing a sell in the market, it's not going to be hard. And even right now in Globex, it's kind of looking like a bit of an H pattern. And if this thing breaks down, it's not going to be very hard. First stop to me is going to be down by this 52.80 area, maybe 52.78, you know, give or take, the highs of the 2 o'clock candle. And then if we come through that, I would not be surprised at all to see us come tear through this. Look at the thin structure here. So I'm just going to mark off this LVN just so that we have kind of that gap, that volume gap right there. Okay, so 52.69, you know, and this was really what I was thinking. We would come back and retest this prior high from Thursday here. So let's keep an eye one step at a time, but under the 52. 69.5, you could say. We'll look at 60, and then under that, I think here at 52.51 is going to be the ultimate target for a short for the short trade. Hopefully this just doesn't happen in Globex and we're going to miss the whole move. I would wonder what would happen tomorrow. And, for the bulls, they're going to need to really recapture 5,300 there, the figure. They would have to get over that for a chance to kind of take out this downtrend that's going on right now. You can see, obviously, we can throw in a little... throw in that, right? So we're going to need to break up over this area here to kind of neutralize the trend, and then we'll see about retaking 53.11 would be my next guess there. We get back over that, and then we're going to target these next equal highs, that previous swing high point that we mentioned earlier. So that's pretty much what I'll be looking at here. Obviously, we're going to need to recapture it. We don't, you can have the trend line if you want, but I could already, personally tell that we can tell that also is where they're going to neutralize the downtrend, is because that's the prior structure right here from these lows here, 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 and here. Okay, so that's that previous structure that we held, and now it's been broken. That's going to need to recapture, and of course we've got the downtrend, but even without the downtrend, you can see that once we recapture it, that downtrend will be broken. And not so much if we do it, later on, but as far as here. But either way, that's just what structurally what would be going on. I would say that I like that long over 53 flat. First target for me would probably just be about 6 points up at this first equal high. Then the ultimate target there would be that 53.11. Possible short trade there, maybe even that short trade up at the here at these equal highs. I don't like that one at 53.05 quite as much. I'd much rather, if I was going to play a short trade, I'd much rather right here to try it. But you could try at the figure too, as long as if it comes up to back test that 5300, you could try a short there as well. That is a potential trade idea too. So yeah, that's pretty much what I'll be looking for from the day trading context for the E-mini S&P futures. Okay, so now let's get into some other data points that we like to look at, see what we can take away. Friday was a weekday here. Let's open up the sectors as well as the advanced decline and the VOLD. Let me make this a little bit bigger for everybody here. You can see the outflows on Friday on the VOLD pretty strong. We've seen them stronger, but seen them stronger to the downside before, but definitely the strongest outflows that we had all week. We spent most of the week in that above that +1 territory. Higher, you can see there also ADD was down on Friday as well. First day of the week again that really traded below the zero line all day. Well, we've had positive inflows pretty much all week here. As you can see, we've been above the zero and almost in that trend higher zone a little bit on Wednesday. And then as far as these sectors on Friday, we had semis still kind of leading the way. XLC was up, but XLU utilities there, that's interesting, more of a defensive structure. So I'm going to be definitely paying attention to what sectors are leading. As long as SMH is reading more of a little bit of a risk on type of, an XLC more of a little bit of a risk on. So I like seeing something like that, or something like XLK or XLV up. But if we start seeing like real estate or consumer staples or XL, I think that's XLP or XLB, or industrials or any of those defensive ones leading, yes, that's a broadening of market, but I still would want to pay attention to that just to kind of give me an idea of what potential the risk appetite is. And for me, I've kind of been thinking or leaning more towards that the market is going to continue up, but we're going to see some broadening, and we've already seen it, but we're going to see because obviously semis with SMCI, Nvidia, and AMD have been really leading the market charge so far. Apple's kind of been left in the dust. Tesla's had a really tough time, but we've seen the semi stocks really do well. Also QCOM and MU, although they're not quite semis, but they still kind of get kind of bagged in there. But I think that you'll still be able to make money in this market. It's just not going to be in the places that we have been used to in the last like 2 or 3 months. That's just kind of my opinion, and we'll see about other names kind of flying, and that's where I've been kind of putting my attention. Right, everybody's on the AMD trade, everybody's on those. I'm trying to see now where there's kind of value that has not been discovered yet, and that's if you follow me on Twitter, you know that I took a Google trade that I've been in, I'm still in, but that was one where it was down. All the other stocks were up, and that was one of the tech names that kind of was lagging. So that was part of that thesis was, all right, this is going to be a catch-up trade, that money's going to come back into it. And I liked it better than Apple, and just generally as a company, I think it is kind of, Apple's a little bit at a stalemate, and Google is still kind of innovating, although albeit probably secretly. So anyway, all right, rant over. All right, we're done with the ADD. I guess the only other thing I wanted to say about this, we can see here though that we had only 1, 2, 3, 4 sectors green, and technically even SMH is in a sector, but it's been so powerful I've been putting it on there. But we had the rest red here, so you can really see that imbalance, and that was reflected in the breadth on the market Friday, and just that overall weakness. So yeah. All right, so let's move along here. We're going to take a quick look at the dollar, as that really has made a strong comeback, and I kind of had given up on the bullish trade for the dollar. It almost broke down. It did really break under that 104. I said, under 104, and under, I think it was 180. I think it was 103.80. It really was my line in the sand that needed to hold somewhere in this area. It sold off down right into our levels, though. I can't complain about that. 103.15 came down, made a low down here, but since then has really recovered. You can see here we got recovered back over the 103, and then had a little bit of trouble at 104, and now we're back to where we were. Let me throw up, why don't I just do a 90-day? Back to where we were at this critical area here. Okay, the 104.50, this is key. You can see how many reactions here that we've had on the chart. So we're going to be watching that. Over that, we look for the 105. We almost got there. Over 105, that's where I really get kind of more worried, I should say, because remember, the stronger dollar, more pressure that puts on the equities, but it's pretty much seemed to be more or less brushing it off, even with this run up, but I think maybe over that 105 would be the breaking point that the equity market might start to care more about what's going on, and over that 105, my next target for the dollar would be basically 105.80, 90, 105.90, we'll call it. But we'll see. Maybe it just chops around, right? This would probably be a best case, at least for that. At least that doesn't give us any near-term downside. But it's kind of a neutral stance. I'm bullish again on the dollar now that it's back over that 104 I have to be, and back over that 103.80 area, and you can see the 200s right here too. So as long as we hang out over here, I mean, we could just end up having a flag and then finally breaking out, maybe come back and retest, finally make it to that 104, that 105 level. But again, watch out over that 105. That's my next target. And I hate to be bullish on the dollar here, because we'll see. That doesn't usually spell good things for the market, but we shall see. All right, let's go into rates really quickly now, especially with FOMC behind us. And let's look at the TNX here, the 10-year Treasury. And what's going on in this world, right? So we were talking about this major key level that was very important. And looks like we traded right into it, right? This was kind of our area. traded into it. It peeled off. And that's what you wanted to see. I mean, you know, overall, we are still in an uptrend here. You know, we can do a little channel, right? That's fine. So, you know, bigger picture, as long, you know, as long as it stays in the channel, it's on this upward trajectory, right? So, you know, we will be watching that. And I wonder, though, it's kind of just a weekly old bear flag. I mean, you could kind of make a case for that. I mean, it's kind of, you know, obviously we have to break this trend here, but just, you know, if you want to do, right? Dun, 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 dun. Or the hockey stick. Like a hockey stick. But anyway, we start to break down, boom, we break down, something like that, right? So that could be a bearish case here. I wonder what it looks like on the monthly. Yeah, I mean, you could make a case for it. So there's a couple of ways you can look at it. Right now, though, on the daily, it's just sitting at the 200. Let's see what happens. No real cause for concern until, again, we break out over this major level. So we'll wait. All right, let's go into some other data points really quickly. All right, and we will, where are we going to start? Let's start with the SPX A50R. How many stocks are trading in the S&P over their 50-day period moving average? And the 200 is the one at the below, the SPX AR200 or 200R. Here had a little bit of a bounce back here on the 50. I like seeing that. Was kind of tracking this little downtrend. We tried to break over it, back under. Again, as long as we're over 50%, really not too much to worry about. Here we're holding the 75. So let's see if it comes to that 75% again. We'll see if that maintains. That's fine. The 200 though actually is broadening out nicely. I do like the look of this. This is above the 75%. Marker, and that is good and healthy. Everything checks out there. Okay, let's go to the put call ratio and just looking at the straight VIX. Put call, okay, we're seeing a little bit of a move off the 75 here. All right, so that's interesting. A little bit of bearish sentiment coming in, but nothing too extreme. But the VIX, however, here back at this 1270 area, this has been important. You know, nothing really to be too concerned with, but in this area, I wouldn't be surprised to see this get a little push here. And we're going to go into the VIX futures and take a look at the VVIX as well, and why I do think, you know, I was mentioning about a potential trend down day at some point this week. Well, if we also look at the VIX here, the VVIX, excuse me, we're right at this critical area, right? 75 is our kind of our complacency zone. You can see what's happened with the VVIX every time that it's come into this area here. Watch to see if we see some type of reaction in this complacency area. Boom, I wouldn't be surprised to see this at least touch 80, maybe a little bit higher. So this is positioned to me to say, watch out, at least this week. We'll see if there's any reaction there, putting more volatility. Still in the VIX futures, still in a deep contango. Nothing really to report there. New contract out. Let me actually just mark the backwardation line. There we go. And this is encouraging here, though. We were monitoring last week the VIX 9-day versus minus the monthly. We didn't like those readings over the 0. Now smashed right back under. So I think that this is constructive. This constructive overall. This is constructive overall. This is a little bit of a warning sign. So that's what I am seeing from this viewpoint. Let's take a look at the new highs versus new lows, if I can find them. Here they are. Okay. All right, new highs versus new lows. Oh, Oh wait, yes, okay. Not bad. We had a little bit of that bounce, right? We were coming in out by that 0 last week, and we didn't like that. Had a nice strong bounce this week, firmly above 0 now. Looking good there. Let's just see if we hold over 200. 204, but that is all well and good. I like what I see. Let's look though. I wanted to take a quick look at the transports here, because you can see here we came into kind of this critical area now. We didn't quite get there, but you can see just this general area here by this 264 zone. Anywhere in this area, you can see, and I if I wanted to make like a little supply area, I could, I could even do this, something like that, right? So you can see we bounced into this area where we are in a balance range here, but the fact that we hit this area again, and now we saw a pretty strong move to the downside. I'm going to watch very carefully if if buyers start to give up basically the point of control 15.813. Watch that. If that starts to break underneath, I wouldn't be surprised that we start trading down into the lower part of the balance here, maybe to the 15.535 area, 30, just down into this, basically this zone. Pay attention to that, and if that happens, it could show a little bit of that could spread out into the S&P as well if the transports want to start to get a little bit funky. I'm not too much of a fan of the way that this daily looks, and just that rejection again for the third time when it could have broken out, but it did not. So we'll watch that. Okay, and I think that's all I wanted to go over. Anything else here? I'll just take a look at the bonds. No, there's no divergence there. Pretty much in lockstep, so that is all well and good. All right, I think that's pretty much everything I wanted to go over for this video. Thank you so much for taking the time to prep. Remember, a prepared trader is a profitable trader, so let's trade our plan and plan our trades. Thank you so much again for joining me. Really appreciate it. If this is your first time joining me and you enjoyed the content and the video, don't forget to subscribe to the channel and turn on the notifications so that way you are updated every time we post a new video about the markets. I hope you all have a beautiful rest of your Sunday. Take care and have a great evening.